Guys, look at this sea of red. One of the things that I actually am surprised about here is that Apple is down more than NVIDIA. I am very shocked about that because Apple isn't massively overpriced. I do think NVIDIA is overpriced, but I'm not going to guarantee. Of course, you can't say what's going to happen any given day. Not surprised by Google. I think Google is one of the more reasonable plays in the market right now. Now, guys, the big issue here was tariffs. That's why Restoration Hardware, look at this thing, down 40%. This is big, guys, and here's why. Look at their all-time high, 744 in August of 2021, 3.5 years ago, and it is down this much. This is big. Now, we always say in our videos, we say this constantly in every video on both channels. I like this quote from John Hussman. In a room filled with gasoline, with a fireplace in the corner, we don't know which spark will cause the explosion, but there will be a spark that causes the explosion. Could it be tariffs? I have no idea. Guys, we've been in this before. The NASDAQ's only down 18% from its all-time high, and the S&P is only down 12% from its all-time high. These are nothing. This is nothing that could happen. I mean, look what happened during 2022. In 2022, with that bear market, I think the NASDAQ was down 30-some%. We don't know what's going to end up happening here, and I don't want anybody to think that this is any sort of victory lap for anything. What this is saying valuations are very, very high. Are things cheaper than they were a month ago? Absolutely. A month and a half ago? Absolutely. Does it make them cheap? No, it does not. We have to remember that. And I hate to be that broken record, but guys, I'm a broken record with myself, so I'm going to be a broken record with you. The goal here is to continue to follow your process of dollar cost averaging and low cost ETFs. For those of you out there who love buying individual stocks, there are some good names I think out there that are great. But you got to remember, I think Google, this is my opinion, is fairly valued right now. It actually offers some good upside here with good returns on IRR potential. With that said, if the NASDAQ were to fall another 30%, you better believe Google would fall along with it and fall hard. Why? That's what ETFs do. ETFs, when they're sold, they have to sell what's in the ETF. And Google is a big piece of the S&P 500 and the NASDAQ. So when that S&P 500 and NASDAQ gets sold, Google will be sold along with it. It will be hurt. Is it possible it's not hurt as much as the rest? For sure. We always say the most overvalued companies end up falling the hardest during a pullback. Look at NVIDIA. NVIDIA hit an all-time high of, what was it, 154 or 150? Let's pull it up here in our Everything Money software, which must be overloading because it is my computer. It's actually my computer here. I hope it's my computer. So NVIDIA here, let's start from the beginning here. 5.5% the NASDAQ is down right now. 5.5%. Is everybody else having this issue or is it just me? Because this computer kind of stinks at times. So the NASDAQ is down 5.5%. There we go. NVIDIA, 102.75. 153 was its all-time high. Guys, look at this date. That wasn't even 3 months ago. Wasn't even 3 months ago. And we're already down from 153 down to 102, almost 35%. The big one also for today, let's pull up Nike. Nike is an interesting one, guys. We've talked about Nike before. Nike had an all-time high of 179. We made videos in the past and we said, Nike's a great company, but we don't think the premium's worth it. We'll be interested in looking at it further under 100. And I started buying shares below 80, something like that. And guess what? I'm down a lot on those shares. Guess how much I care? 0. This stock is down big time today. Why? Tariffs. That's the big word out there. Now, the question you have to ask yourself is, where is Nike going in the future? The future is unknown. We're humans, we make mistakes. That's why we need margin of safety. With Nike here, you look at this going, damn, $56 a share. Guys, look at this. It's selling for 15 times free cash flow. You might sit there and say, that's not low enough. Maybe not. But for a premium company like Nike, with these kind of returns on capital, with this kind of moat, I don't know, guys. 15 times free cash flow, 17 times earnings. Now remember, for those of you who have our stock analyzer tool, when you have our software, the stock analyzer tool potential return includes the dividend. So don't add the dividend on top of it. It includes the dividend. And let me show you guys what I think of Nike in our stock analyzer. And again, it's not for everybody, but I did very reasonable assumptions here. 10-year analysis, 3, 5, and 7% revenue growth. They're down 9% in revenue over the last year. So some people might be like, Paul, you're crazy. That's too high. Maybe it is. But do you really think it's going to last forever? During the Great Recession, Microsoft's revenue fell 1 year, maybe 2 years, stormed right back up. These are tough times right now. Did 10, 11, and 12% profit margin. I did my PE of 20, 23, and 26 with my 9% return. Guys, at today's current price, if the middle assumptions occur, I'm looking at 14.5% return. And when was the last time we saw Nike all green on my assumptions? I don't think it's ever happened. Now, where's Nike going from here? I don't know. That's the hard part. So whatever you buy today, guys, you're not gonna get the absolute bottom. Assume it's gonna go lower. What we're trying to do here is teach this principle-driven investing idea that you find a company you like at a good price. If it gets cheaper with the same fundamentals, and don't let the news that's sparking out there just to influence your decisions. Of course, you have to consider the news. There's news out there that is going to tell you, hey, you got to be careful here. The question is all the news right? News follows the stock price. If you could buy Nike and the middle assumptions occur and make 14.5%, would you be happy? I think you would. Remember, guys, to get really big companies at really good prices, it's hard because those companies get a lot of attention. Look at Meta when it fell to 88 in November of 2022. Look at that. I'm hearing people now say, like, remember Meta? I'm like, I know, I remember Meta. I remember it completely. I really appreciate you guys joining us on this live stream, and we're going to do a lot more talking here about what's going on in the markets. But the tariffs are the issue right now. Who would have thought 6, 7 months ago tariffs would be the issue? Is it the issue? I don't know. I call it overvaluation. Now, you might sit there and say, yeah, but Paul, tariffs are what caused. Okay, the analogy to give is you take sips of milk out of the container, you put it back in the fridge. Finally, one day your wife says, I'm fucking done with this. I'm divorcing you. Is it really because you put the milk in your mouth and you say, no, it's not the reason. The reason is because you never listened to her. Valuations are the you never listen to her. Tariffs are the taking the milk out of the jug. Valuations are the more overvalued we are, the harder the fall is going to be. And the scary part is, look at 2000. We were 55% overvalued in 2000. We had 3 years in a row of negative S&P 500. Guys, after this pullback, we're at like 95% overvalued. We're still overvalued big time. Now, some would argue that some of the overvaluation is not fair. AI is changing the world. There's no doubt AI is changing the world. But remember the fifth and most important tenet of our principle-driven investing. A good story, a great story at the wrong price is a bad investment. You have to pay the right price. And how you know you're doing this is my, and by the way, speaking of, I was about to say criticism of crypto. Let's pull up, because let me pull up crypto here. So the NASDAQ's down 5.4 and Bitcoin's only down 6%. So real store of value there. But the thing about crypto, as I say, is like, okay, everybody's arguing about crypto. They list the 10 reasons why crypto is amazing. And guess what? I don't necessarily disagree with a lot of it. I don't disagree with it at all. But what I say is, fine, add 2 zeros to the price of Bitcoin. Is that statement are all the statements still correct? Yes. Take 3 zeros away. Is it still correct? Yes. So you're not investing, you're speculating. All you care about is the story. With me and Nike, Why do I like Nike? Well, I think it's a premium company selling for 15 times free cash flow. Add a zero to the price. It's now 150 times free cash flow. Do I still believe in it? No. That's investing. That's investing. A process-driven approach with numbers that really matter. Now, guys, we are going to get to a time where there's going to be a lot of things on sale. I don't know when that's going to happen. Is the start of it? Maybe it is. But what we're here to do is remember that the U.S. isn't going away. The U.S. economy isn't going away. If you think it's going to zero, put more money into it, because if it goes to zero, your money is worthless anyway. You might as well put it towards something like that. That is the big key here. But every past bear market and crash looks like an opportunity. Every future one or current one feels like a risk. I don't know what's going to happen. I wish I knew what was going to happen here. I really do wish. I would be awesome. I just had lunch with three of my wife's nephews. They own a business, a local business, and they want to invest money in real estate. And they said, well, what about interest rates? What do you think is going to happen? I'm like, I don't care. They're like, what about recession? I'm like, I don't care. And they look at me like, okay. And maybe one of them's watching right now because he tends to watch the show. He quoted a few things I said, which I loved. He's just trying to get in my will, I think. But either way, by the way, if you're watching now, please text me if you're trying to get in my will, because I'd love to see it. That'd be great if he texted me right now and said that. But what the key here is, I say I don't care about where these things go, because good investing doesn't need outside factors. They just need time. And that's what we have here. We have time. Most people here have time. I made a post yesterday, so on X, and some people are watching us on X right now because we went live. But on X right here, let me show you guys the post I did about Nike this morning. And it's been one of my best posts. I have 16,000 views. I talked about Nike. Sorry, the post before that. Dear baby Jesus. Where's my Dear baby Jesus post? Dear baby Jesus. Here it is. Now, I said, I know we don't talk much. That's on me, not your fault. Please let the stock market crash tomorrow. If it's not part of your plan, I'm cool with that. Future's looking phenomenal. You're bro, Pablo. Somebody wrote, Paul, people are going to be really hurt and affected. This is not a time to be fun. Like, no, guess what? Guys, the world's going to do whatever it's going to do, whether you're butthurt or not. So you might as well learn to adapt to what the world's doing. I made mistakes by shorting NVIDIA. Did I cry about it? No, I learned my lesson. I move on. I didn't invest enough that it would affect my life, even though I was completely wrong, which I was. Okay. If it really affected my life and I still did it, good lesson learned. Good lesson learned. If you're close to retirement and you have 100% of your money in stocks, I would encourage you to reevaluate that no matter where valuations are. Is the upside really worth it to you? That's the question you have to ask. This is part of this whole principle-driven investing. If you don't have the stomach to weather this volatility is not risk, by the way. But if you don't have the stomach to weather the volatility, that's okay. There's other ways to make money that'll help you become better. So, guys, here we are. My wife's 3 nephews. Yeah, 3 nephews. I don't know. Oh, thanks very much, Tida Man. I appreciate that. Is it crash really? You're emotional at the market. Why? It's not about the money. It's about the U.S. I mean, okay. I don't know if it's a crash. Who knows what's crash? Guys, we don't know what's going to happen until basically, COVID was interesting. Remember COVID, guys? Well, Nick wasn't here, but Tim, you were here during COVID. We were having a great time. When we started the channels, right after COVID.
Yeah. And it was
right
like every time we were down 1%, we got Chipotle or whatever for lunch.
That's right. I bought the office Chipotle every time we were down 1%.
Oh, that's awesome.
We were down 7-8% at times. Oh, yeah. It was incredible. It was absolutely incredible. And by the way, I passed 10,000 followers for the first time today on Twitter. That's kind of exciting. 10,000 followers at EMPaulG. And I'm very active. I have 5,600 posts on there.
Paul,
yeah.
Jay, by the way, wants to see Angry Paul. Just watch our real estate channel, Everything Money Real Estate. There was a video we just recorded the other day. You'll see Angry Paul in there. You want to demonstrate what you were doing yesterday in that video?
No.
No?
Let them just see it. It's fun.
Just watch the video.
By the way, I now see what everybody's laughing about. I said 3 wives today. 3 wives' nephews. Okay, my wife's 3 nephews. Sorry, I did not mean to say my 3 wives' nephews.
So which wife is your favorite?
Yeah, Lisa. Is that a good answer? Yeah. Oh, God. Guys, investing is simple, not easy. It's the stomach part. That's the hard part. I don't care who you are. Red sucks. I'm not short the market or anything anymore. And I'm really glad. I really love seeing red days. So I look at this saying, guys, it's, you're not going to, with the way you can outperform the market, everybody who's watching this right now is capable of outperforming. The question is, do you have the stomach to outperform? That's the question you have. That's the question that needs to be asked all the time. Do you have but this is why if you're strategic about how you buy, you can buy ETFs and outperform the market. I've said it 1,000 times. Look at QQQ. QQQ, let me pull up a blank screen. QQQ from March of 2000 to August of 2002 was down 80%. I think intraday at one point it was down 83%, something like that. Guys, if you started buying on March of 2000, every single month until today, well, maybe not anymore today, you had 14% annualized return. Dollar cost averaging, that crushes the market. The market didn't do that since then, since the peak of 2000 and now. It's the question of, do you have the stomach to sit there and say, wow, I started buying and it's down 80-some%. Can I continue buying? That's hard. I don't care who you are. That's difficult. That is difficult. I'm questioning stuff. By the way, I want to give Nick a shout out here. Has everybody seen our good friend Alibaba today?
No,
at one point it was up. That's my dog pill. At one point, Alibaba was up. It's even today. I'm shocked by this. I thought for sure with the tariffs, it would be pummeled. Did you not think that, Nick? Oh, Big Shot did not care. What was that, Tim?
I did. I thought so. I asked Dalton about it. I said, it
was up at one point today.
Wow.
Why? No idea. No clue. Just like I never thought Apple would be down 10% while Nvidia is only down 7% only. Oh, man. I was shocked by that. NASDAQ's down 5.5% still. Here are some of the biggest losers today. Dell, Micron. Oh, and then we have to go back to Restoration Hardware. Was it halted today? Well, I heard Restoration Hardware was halted today. Okay. PayPal's down 7.5% today. That's a hold of mine. I was buying all the way down to 50 on PayPal. It got all the way to like 90 or something. I don't remember how high it got. Amazon down 8% today. I mean, who knows what's going to... Guys, look at it this way. Amazon was one of the beneficiaries of COVID. COVID happened. Everybody was like, Amazon sucks. Posting about me, Kevin. I'll get Paul going. Good idea. Why did we fire Mo? We didn't fire Mo. Mo just enjoys golf a lot. We should FaceTime Mo now. He's on the golf course. No, he won't answer. He's a dick to me. He's too rich to care. I'm richer than the guy, and he works less than I do. Should we FaceTime him? Yeah. Let me see if he answers the FaceTime. He's not going to answer. Let's see here. Mo. Oh, that'd be great. Let's see if Mo answers the FaceTime. He's golfing in Utah. I think Utah, or is it Vegas?
Dude, he's in the neighborhood where we were.
Was he real? Is he really?
Yeah, he's in Daryl's neighborhood. Like literally, we mapped out. He's 2 minutes away.
Come on. He's not answering me.
Across the street from our Airbnb.
Is it a nice area?
Beautiful.
Damn. Mo doesn't invite me to his golf, but we don't really want to do that. My wife and I are picking up golf, but Mo has not been on videos lately. Why'd you guys deport Mo? That's good. That's funny. Hey, Ethan, maybe PayPal is junk. You might be right. Wow. Look at this. So, Honored Chimp. Articles are already being posted about Alibaba saying it's a stock to buy to protect from Trump tariffs. Baba was untouchable 9 months ago. That's such a beautiful statement. That's such a beautiful, beautiful statement. I want everybody to remember this. Go watch our videos from the past when we talked about Alibaba and people were really like, dude, you don't get it. It's China. They're communists. They suck. By the way, they couldn't be... Oh, yeah, look at Target. Target's on like $96 today. Did you guys see Target? Wow. I was buying Target below to 103, went back up to 180, and then now it's at, look at that, $95 a share. Look at this dividend yield. Look at that dividend. Big time dividend. 4.7%, 4.25 forward looking. That's a lot. I have HPQ, Ricardo. I haven't looked at it in a while. Aston Martin. I never shop at Target. Probably because you're a guy. Target, I own Target. Remember, don't ever buy a company just because I or anybody else owns it. I do own Target. And I do think Target's going to be around for a very long period of time. And I do think it's going to be a bigger company 10, 20 years from now than it is today. And I look at this going, look at this, Tim, Nick. Single-digit PE and single-digit price of free cash flow on the 1 year and 5 year basis, basically, with good returns on capital. I mean, I look at this going, damn, what do you do here? What do you do here? What was that? Selling by Baba's next comment. I bought Nike today too. Yeah, Nike is incredible. By the way, I will say, I think Nike, somebody wrote today in my tweet, like, I don't think Nike is a great deal right now. I said at 56, like, okay, I don't know what your assumptions you're making are. I felt like my assumptions on Stock Analyzer for Nike were very reasonable. I got to go find it now. Let's go back and look at these. And I want everybody to butcher them. Is 5% revenue growth too high? I don't think 7's happening. I think 3's too low. I don't think this is the only questionable area, but I got to ask you, look at these returns on capital. Isn't this a premium company? This to me is a premium company. I think it deserves a premium PE. What's that premium? I don't know. Is it 17, 20, 23? Is it 20, 23, 26? Some would argue higher, some would argue lower. I know it's not a 15 multiple of earnings and free cash flow. I just think that's the market rate, and this is a better than market company. So you got to give it a premium. Remember, value investing isn't just about buying bottom of the barrel shit companies. That's one way of doing it. The cigarette butts, as Warren Buffett used to do back in the day. One last puff. Buy it really cheap, get one last puff out of it. I don't know. Have you ever covered CoreWeave? I don't think I have. Oh, thanks, Chris. And Chris, by the way, you've also made a lot of money because the market's been up since we started the channel. But at the same time, I'm hoping that over a long period of time, that you come back 10 years from now and say, Paul, I'm a better investor because you guys helped me. I hope that. Oh God, will this be the time you take action on Race or Hershey's? Hershey's is more than Race. Race is Ferrari, by the way, guys. I just think it's too much. I agree with you, Daniel. I think Nike under 60 is a really good value. And guys, we have a video coming out this weekend. You guys got to watch it about what's it called? What's the title? Tim's pulling up the exact title so we can explain it. Why aren't you? Oh yeah, brace yourself. Super investors warn of stock market history repeating itself. Guys, there's a lot. I mean, listen, valuations are what they are. You got to look at it and say, hey, is it? You don't think Nike has a moat? Okay. You got to wonder whenever you're buying a company is, hey, are you buying it at a price that's reasonable for the future? And then you look at the stock market in general. Are you buying it for a price that's reasonable for the future? I think today, it doesn't mean you stop, but I think today is really difficult to get, unless we have major inflation helps this market. Because if we had 7% inflation 10 years from now, the GDP is double and we're back at normal valuations. But do you hear what I just said? It takes 7% inflation for 10 years and this market being flat for valuations to be even. That's a lot. That's a lot. Assuming no EPS growth. What was that? Let me see, Rocket Mike. Hey, Paul, what's up with Google Kodak post on X? Oh, so great question, Rocket Mike. There's a lot of people saying that Google is going to lose its search engine dominance because of ChatGPT. Kodak was a company that they were late to the game. Now, the good thing about Google is they have AI working in their benefit. They have YouTube, they have Google.com, they have Gmail. They have a lot of different ways to get people ingrained. But I look at Kodak saying, Kodak's still a $500 million company with over $1 billion in revenue, but it's not the dominant player it was in the digital age. Is Google becoming another Kodak? I don't think so. Could it be? Sure, go ahead, Tim.
Was Kodak ever a verb?
No, but Kleenex is what's Kleenex doing? Yeah, but that's not a verb. You don't say Kodak moment me. Yeah.
No, it's just like Google it.
Yeah, Google it. I mean, it's YouTube it. You know what I mean? Again, those are small anecdotes. Those are a lot of anecdotes. I mean, a lot of people in the world do that. The question is Google the next Kodak? I don't think so. I think Google's, oh yeah, you bought some Crocs today. Ooh, next, I want to look at Crocs. That one's hard hit today. Oh, way more than Nike. Yeah, Paul, too many tickers in there. $14.5%. Can you mute my mic real quick? Let's look at Crocs here. So first off, let's look at the metrics of Croc. I mean, look at this, guys. 6 times free cash flow, 6 times earnings, all-time high 183. Currently at 90. The thing is, it's 95. It's not even a 52-week low. I mean, I look at this is what I said about Crocs in previous videos we did. If you think Crocs is going to be around forever and they're going to grow their revenue 3, 4, 5% a year, what are you doing? You got to. I mean, I look at this going, this is an incredible. I mean, look at this: 6 times free cash flow, makes $900 some million a year in free cash flow, high returns on capital. I mean, if you're here to, I'm not telling you to go buy it. I'm just asking you if this is what you think about the company. Remember, I always ask these 3 important questions about investing in a company based on my goals for investing. My goals for investing are lazy investing. I have enough. I have 1,000 apartments. I've got business upstairs that are growing. I'm going to own 5,000 apartments in the next 5 or 10 years. I don't need money in stocks. So when I buy companies, I want to buy companies I think that are going to be around for 20 or 30 years. So if they're around for 20 or 30 years, then I go, hey, are they going to be bigger than they are 20 or 30 years from now than today? If the answer to that is yes, my third and final question is, can I pay a reasonable price today based on the future growth that gives me an adequate return on my capital? 6 times free cash flow. That's a 16% cash flow yield. If they just buy back shares like crazy, imagine what happens here. It's incredible. I got to tie my shoe. What questions do we have? You guys want to ask me something? Because I don't see the screen anymore. What other questions do we have? We're going to go for another 15, 20 minutes or so. Intel's up? No way. Somebody said Intel's up. By the way, guys, I could tell you right now, I don't even look at my accounts. Oh my God. Intel's up. Talk about bizarro world. Paul looks like Vector from Despicable Me. I got to see who Vector is from Despicable Me. Oh, this is going to be interesting. What the fuck? This is not me. This is 100% not me. Where did this come from? Oh, this guy is pretty sick. That guy is pretty sick. I used to have a bowl cut, for the record, when I was a kid. That's great. That's so good. Thank you for that. That was good. Oh, Skechers. Yeah, a lot of retail was dead today. Skechers was plummeted too. Well, Intel up. I read something the other day about Intel last night that said Intel CEO is well known. The new one is well known for under promising and over delivering. So we'll see if he does it again.
Paul, go look at the near 52-week low list. Click on the stocks there. Yep. Go. That's the 52. Go look at the near 52.
Ah, thank you.
And just scroll.
Good God. Look at all this red, guys. Holy cow. Generac, nice. This is a holding of mine. This is a holding of mine. Look how high it got recently. 195. I was like, I only made one purchase of it, and then it skyrocketed from there. Generac coming in hot. I love it. Look at that free cash flow. Woo-wee. Generac's looking good. Wowzer. Decent returns on capital. Nothing to write home about. Let me see my last Generac analysis. Ooh, let's do 9%, not 15. All right, it's there. 13.5% return. Guys, remember, you can't mimic people what I'm trying to teach is a process here. I know everybody wants to see what I own, and I'm pretty open about what I own. But you got to remember, I'm not going to buy like the average person is going to buy because I don't need to. I can wait for absolute bloodbaths in the street to deploy a lot of capital. That's probably my plan. Yes, do I buy here and there? Did I buy a little Nike today? Maybe. No, I didn't. I want to, though. I sold puts, though. And I look at that going, okay. I look at this thinking, when there's blood in this, I saw something today on Twitter go, oh, there's extreme fear in the market. Look at the indicator. I'm like, this isn't extreme fear. This is just people temporarily being upset. This is not extreme fear. Extreme fear is like bad. What are you laughing about, Tim? What happened? What did I see? This is great and all, but what does this mean for Ted? Do we have another Hans and Matt Jones here? That's funny. That is funny.
You're welcome back at any time, Honored Chimp.
That's funny. I know. Hey, Paul, can you check on VG? What's VG? Rocket Mike. We've seen you before. Venture Global. What's Venture Global? 24 billion. Ooh, look at this negative free. Ooh. Ooh. Yeah, I just look at this immediately thinking, no, thank you. I don't understand. Oh, natural gas. Who should talk to you about this one? Dalton. Is Dalton in this?
Yeah.
Dalton should be on. Hey, Dalton. Paul, my mom and AJ are watching this live stream. Well, this is an awkward time to say, Dalton, you're fired. Happy fucking birthday yesterday, pal. You're out. Poor guy. That was a joke. Let me see it happen. Come on, I want to wait for Dalton to text me. No Dalton text. Hey, Paul, take a look at Applied Materials, HPQ. I own HPQ. Okay, what else we got here? What else is going on in the news of the market? I have tennis tonight. That is my reminder that just popped up. I have tennis tonight. No, fuck pickleball. Oh, look at this one. How much more can stocks fall? Hint, plenty. That's interesting. So, guys, do you think we're in a recession already? I don't know. I mean, it looks. But I thought that for a while, and I'm like, when you get the inverted yield curve and all this stuff. FaceTime Dalton. I'm not laughing, JNAP. How old am I now? Is Ethan, are you asking me how old I am? Dalton did not respond to my. Where is it? Where did he say it? Oh, okay, got it. Dick. Well, Dalton just texted me, Dick. What was that? What'd you say? Just tell me now. Nobody's going to hear it. I did it. You know, I'm not everybody's secretary. I'm done being everybody's fucking assistant and secretary. My wife, I have to text her. You know, I texted her yesterday. No, it's a second. I texted my wife yesterday and said, hey, your niece's daughter's 3rd birthday is today. She's like, thank you, Pete. I'm like, what am I doing here? I'm like literally texting my wife about her niece's daughter's 3rd birthday. And I don't even know why you doing that. Like, Tim, do you feel bad not messaging Dalton?
Yeah, that's it.
I should have done it. Why didn't your calendar? Put a reminder like I do with everybody.
I can't do it yet.
Oh, yeah, the thing is right here.
But I will when we're done.
Yeah.
Next year.
Cedric just came in and goes, wow, I didn't realize how much Nike fell. VFC is that retail business. What do they have, like Land's End or something? What do they own? North Face, Vans, Dickies. So what this is do you believe in their products? They have a $400 million free cash flow last year, 383 in the last 5 years, $4 billion market cap, a lot of enterprise value, so a lot of debt in there. Not the greatest return on invested capital. Let's see their free cash flow and see if it's consistent. Ow, fuck, that hurt. So one bad year. Oh, but look at these. These were big years beforehand. Is it a declining business on its way down? Is 10 times multiple enough? I don't know. Let's see. By the way, let's see what my good friend Palantir is doing. I've had nobody ask about Palantir. Oh, not bad. Only 85, only down 2.5%, 2.85. What was the all-time high? 125, just like last week. No, it was February 19th. Guys, again, so here's the deal. Guys, I repeat the same things over and over to myself every single day about investing, literally every day. Dalton and I, when we talk about the investments we're making, when we talk about investment, you know, we literally repeat the same things over and over. The reason I say this is that's what successful investing is about, is sticking to a mantra and saying, this is what I'm going to do through thick and thin. You got to brainwash yourself. And that is hard. Brainwashing yourself is an uncomfortable thing to do, but it works. I try to brainwash my stepson every single day. I send him, look at me, how many quotes I send this kid. I send him quote after quote after quote. Why? Because I want to get his mindset in the right way. I know he reads them. And I say to him, do you ever read these? He's like, oh yeah, it takes me 5-10 seconds. I like them a lot. He likes the motivational stuff. So I just send him things over and over. And a lot of it's repeated stuff. When it comes to the markets, you got to remember this repeated stuff because guess what? Successful investing is simple investing. The more complicated you make it, the harder it's going to be. It's one of the few things in the world that less is more. Less is more in investing. Mo's golfing right now. I want to nip these rumors in the bud. Mo is not fired. Mo is golfing right now. Listen, you guys remember, Mo lives in Florida for like 6 months out of the year. Mo and I still talk every single day. Mo's on the channel. He has his own channel where he does trading. Mo is very active. Go ahead.
And he is on videos with us. He wasn't able to record with us last Monday because he was going on his trip.
Because he's a dick.
But he'll be in some stock videos with us. There was one that he was in 2 weeks ago. And yeah, he is putting out weekly content as well as engaging the community weekly about trading.
And Dalton's fiance, AJ, just trolled him and said Dalton repeats things over and over and more than just investing. Oh my God. My wife says that to me all the time. Like, I get it. You said that already. I'm like, okay, sounds good. Does she?
Yeah. Literally like, you already said that earlier. I said, I know, but it helps me.
Exactly. These guys, you got to do this stuff. We got with the average viewer. Hey, Tim, what was the average viewer? Like, how long have they been in the market? Like 4 or 5 years, the average viewer of our channel?
Yeah. Less than 5 years was the predominant chunk, but it was like 3 to 5 years.
So you look at that saying, okay, you're new to this. You've only seen a bull market. You haven't seen bad times. And it's going to beat the crap out of a lot of people. And guess what? Just like the tech bubble beat the crap out of me, get better. There's a better way. Sometimes it takes losing money to do that. I'm okay with that. I brainwashed myself and everyone around me. Oh, that's funny. That is funny. Nah. Okay, so what time is it? It is 5 after. It's still 5:1. Who here was excited yesterday? I got home late yesterday. Where was I? Oh, I was at dinner with my brother-in-law. So I got home and my computer screen was already up. So I opened the computer to check email and it was already on futures. For some reason, I see negative 4.4%. I go, what the F happened? So I go to the main page and it says Trump enacts these tariffs. Guys, who knows what's going to happen from these? These are inflationary tactics. But is he doing it to get them to back down? Maybe they are. Maybe he is. I don't know. Thank you, Honored Chimp. I haven't checked Hims in a while, but it seemed very overvalued. Norm from Fallout tried to show your screenshot. What screenshot? Are you talking about Stock Mo? Who's talking about Stock Mo? Oh, no, good God, no. Oh, geez. Stock Mo. That was triggering. I don't look at sectors at all. Lyle, for real, I don't ever care about sectors. So, Andre, I hate to say this to you. We're not going to tell you what Mo's channel is. And the reason being is you got to go find it. It's a very specific thing about how YouTube works. If we told everybody the channel and then people went and looked at it one time and then left it, it would tell YouTube, people are not watching this channel. People come and then leave. So it hurts the channel to advertise it. You just got to find it. Same with we have a real estate channel. I've had literally friends say to me, hey, what's your real estate channel? I'm like, go find it. They're like, really? I'm like, you got to go find it. So are the markets up today? Yes, Rabs, markets are up 18% today. Prove it Mo's alive. Hey, I tried to FaceTime him. He's not answering, so maybe he is dead. Mo, the people want... Let me tell him. Hey, Mo, I'm on a live stream, and the people want proof that you're alive because I FaceTimed you and you didn't answer, and everyone thinks that you're dead, period. Yeah, message failed. How many people do we have in this live stream right now?
1,095.
Oh, wow.
And 171.
Oh, wow. Great. Hello to the Twitter people. And if you're on Twitter, follow me. Where's it on the screen? Here?
Yep, right there.
Follow me at EMPaulG. I just passed 10,000 followers today. Is it too late to dab for that? I might have just lost followers from dabbing. That's another thing Lisa hates. She's like, you got to stop the dabbing. I'm like, I love dabbing. She's like, it's so old. I'm like, I'm doing it. Scroll down, would you, so I can see more? Lies, you sent Mo to El Salvador. I did. Henry, you're not over leveraged because you have a lot in Nike. You might not be diversified, but over leverage means you have borrowed money. Listen, you got to do what's comfortable for you. You know, Warren Buffett says you got to keep your portfolio small. I like a diverse. I have 26 or 28 holdings. I'll probably have 40 or 50 at some point. I'm okay with that. Southwest Airlines down 8.5%. Now we're talking. Let's go check out Southwest. Wow. $29 a share. Ooh, guys, I think Southwest is not for the faint of heart. It's an airline. It's tough. But I think Southwest has the most upside potential. And the reason being is their profit margin is 1.7% in the last year, negative in the last 5 years. Okay. 10 years is 5.7 with this negative here. They were all over 10 to 15% before COVID. That's my thesis. So if we can get back just to 8% here, watch these numbers. And I put a low PE in here because it's airline. Hit the analyze button. I think this has a lot of potential. 19% potential return based on a 14 multiple. That's my thesis on it. Am I right? I don't know. But if I had 30 companies that looked like this, that had these metrics, I'd be very ecstatic. And I'd probably do very well in investing. That's what I like. Love and CCL, I moved on. I did see Love right now. CCL, why would I compare Love and CCL? I don't know. Amazon, geez, Amazon, I just don't know if I get it. It's still a tough one for me because I look at these look at Amazon. That's confusing to me. And I want everybody to please tell me, I'm missing something. I've missed something on Amazon for the last 10 years. I mean, I look at this gross margin of 19.5%. Is this true? I don't know. But in order for them to make a lot of money, I mean, their profit margin last year was last 12 months was 9.3%. Way better than the last 5 years, and it's getting better. Where's it going to go? Is it going to get to 15, 20%? That's where the big money is made. Because if you go to Stock Analyzer here, how do you get Amazon? I mean, look at this profit margin. I have 4, 7, and 10% revenue growth with 9% margins in the middle. Let me put my 9% return. I mean, I'm at 145 here. So at the current price, it's looking at 6.5% return. But again, you make that middle 9%, 12% suddenly, it's a buy. It's a buy, right? I don't know. It's really, really not a buy, but it's probably fairly valued. Amazon is that's exactly what I mean by if you don't understand it, you don't invest in it. I do not it's been proven time and time again that I do not understand Amazon. I order the fuck off of Amazon. I order everything I just ordered 3 arcade machines yesterday from Amazon for one of my house rentals from one of my lake houses that I rent out. 3 freaking, 72-inch. Yeah, from Amazon. Who would have thought 25 years ago I'm ordering arcade machines from Amazon? Yeah, maybe you're right, Henry. Maybe I am too low on the revenue growth. I do not. Oh, yeah. But what is a good percentage split between setting aside money for? So, Silvar, great question. Can we look at this question? You often encourage DCA. I always encourage it. Dollar cost averaging. But what's a good percentage split between setting aside money for dollar cost averaging and having money in your own stocks? Here's what I say to people. My opinion is this. Go to our retirement calculator. Put in your assumptions for retirement. Make sure that you dollar cost average into low cost ETFs enough money to hit your goals. From there, if you have extra money, put that into individual stocks. That's what I would do. Because I look at it going, don't risk retirement making individual bets. Get yourself set aside on retirement with your dollar cost average into low cost ETFs. Doesn't mean, and by the way, be aggressive on putting more when valuations are lower. But I don't believe in buying individual stocks until you have everything else to, for me, if all my stocks went to zero today, I still have my real estate. I mean, assuming that they're tattooed chef or something, not the markets go to zero, my stocks go to zero. If I read all 26 or 28 of them go to zero, I still have real estate. I still have businesses. I'm not going to have a problem retiring. That's why I don't mind buying individual stocks. But if you're just saving for retirement, 10, 12, 7, 6,000 a year, make sure that's in something that you know that you're very comfortable with, knowing it'll go along with the market. That's what you should do. Thoughts on holding cash in this environment? I don't know. Sold all my China stocks. Wow. Interesting. What's SSL? Man, there's a lot of good stuff out there, guys. Have you guys used, who here who's watching this, do me a favor and put yes if you've used our retirement calculator before. Just type in yes if you've used retirement calculator. Henry, I don't know banks. I don't understand banks. I don't understand banks at all. I don't know how they make money, lose money. They're a totally different breed than just free cash flow. Is Apple good? What do you think about Robinhood? I haven't looked at Robinhood. It's probably too hypey for me. Let's see what Robinhood does. Yes, yes. Oh, cool. No, yes. Yes, no. T-Row. I know T-Row's tanking, but T-Row's going to tank more as the markets go down. Yes. Oh, this is great. Good job, guys. I'm really glad you guys have used our retirement calculator. $38 billion market cap. These are very growth companies. You got to be careful on these. High gross margin, though. Interesting. Robinhood's probably a little too, 26 times earnings, but we don't have any free cash flow. A lot of yes. Shall we sell our IRA? Abhishek, I think Google's something to pay attention to. Mike George, any update on PayPal? My views on PayPal stay the same. It's down a lot, and I still believe in it. We'll see if I'm right. Is gold a good investment now? Well, who was making fun of me about gold back when it was like 1,700? I bought gold miners back at 1,700 per ounce, and they haven't caught up yet on gold pricing, but it's just a matter of time. For those of you who are Bitcoin lovers, like a store of value is Bitcoin. Just go look at the price of Bitcoin today relative to the NASDAQ and look at gold today relative to the NASDAQ. Gold down today, but it's not down 6%. All right, let's do 2 more minutes. 2 more minutes. Let's see if there's let's see what my amigos on the Twitter machine are saying. Yeah, that's Nike. Oh, thanks very much, E2. That's very nice. Yeah, this Nike thing was incredible. Nike was just like, people just like, Paul, Nike will never go below 180, you idiot. Just like Google. They said when it was at 150, I was like, well, we're interested under 100. It'll never go below 100. Okay, so I still think Google's actually might even end up below 100 at some point. Who knows? Guys, thank you for supporting the channel. I get great messages from you guys on Instagram and Twitter. For those of you who are part of our community, I think you have a great investment for literally less than, like for $1 a day. If you want to join the community, guys, we have a 7 days for $7 opportunity out there. Go to everythingmoney.com/sign up. We're going to put the link in this chat here. You get all of these tools, and April 15th, we're splitting everything off. We talked about it for a while. It's finally happening. You have to pay individually for everything. If you do it now, you get it forever. Guys, there's a reason why 75% of the people who sign up for our $7 trial, not only do they renew, they also pay for the year in full because they take advantage of that discount. That is going to go up very soon as well. So I appreciate everything. And we're going to be here for a long time. And we're going to be here as things get scary and good. And we'll be the calm during the storm.
Can I give a spoiler alert?
What's the spoiler alert?
So if you do sign up for that $7 trial, it's 50% off. If you do the annual, it's a one-time offer.
50% off.
That is the only time you'll see that price.
And Paul, if you think we're joking,
Paul hates it.
By the way, I texted Tim the other day. I said, we're done with this price. This is stupid. Like our software is way more valuable than this. We're not doing this 50% discount BS.
So do it.
We get too many signups to do 50% discount BS.
So take advantage of it now. Yeah.
Thanks, guys. Take care.